There's a lot to unpack, from the blow-off top reversal to insider selling right before earnings and the key levels where I'm planning my next trades. This is a breakdown you don't want to miss. SoFi's latest earnings report came in strong on paper, but here's the catch. Despite those solid numbers, the stock tanked. Why? It looks like the market was already pricing in perfection after that massive rally, and the price action told us the enthusiasm might have been overdone. Insiders have been dumping shares ahead of the earnings after a 162% run-up in the last 4 months. That's not just profit-taking. It raises a red flag when paired with the timing. If insiders thought this was headed much higher, you'd expect at least some buying, but there wasn't any. So SoFi stock may have gotten a bit ahead of itself. Not uncommon, but how much ahead of itself are we talking here? And before we get into it, make sure you hit that like button and subscribe. These videos are here to help you trade with precision. Here's how I'm playing it. Bullish above, 2260 to 2270. If we can reclaim this zone, we could push back to 2324, then 2410. And if momentum returns, possibly 25. Bearish below, 2090. Lose this level, and I'm targeting a slide to 1950, and eventually 1810. Low-risk long entry. If we flush into 1950 to 1965, that gap top, I'll watch for a reversal setup to ride back toward the 20-day moving average at 2070. Now, let's talk charts. On the daily, SoFi printed what I'm calling a blow-off top. RSI hit overbought territory and is now rolling over with negative divergence. MACD crossed bearish, signaling momentum loss. Price failed to hold above the key 24 to 25 zone, reversing sharply. The weekly tells a similar story. Relentless rally, up 162% since April, but with RSI divergence and a candle formation that often signals a top. And here's a big one. There's an unfilled gap down around 1950, right in the middle of a low-volume speed zone. Historically, price tends to revisit these gaps. Below that, we've got major support at 1810, which also aligns with the lower Bollinger Band.
Bottom line, this wasn't new buying. It was likely a short squeeze and insider cash out. With the FOMC meeting tomorrow and a very extended market, I'm cautious. If the broader market pulls back, SoFi could easily revisit that 19 zone. But if we see a bounce off the rising 20-day moving average near 2067, a quick relief rally back to 2220 to 2250 is very plausible. Market breadth is another metric that's suggesting a pullback is coming for the overall market. How much of a pullback? Well, the 200-day moving average is at 1420 right now. The 50-day moving average is at 1694. Price closed today at 2240 and is down nearly 5% more pre-market. So, what do you think? Was this just a shakeout before another leg up, or is SoFi headed back to fill that gap? Drop your thoughts in the comments. I read every single one. And don't forget to subscribe for more levels-based trading breakdowns like this. I'll keep you updated as we see how SoFi reacts post-FOMC. With insiders selling, earnings volatility, and a gap waiting below, SoFi is at a critical crossroads. Add in tomorrow's FOMC meeting, and this setup could get explosive in either direction. Where do you think SoFi goes next? Gap fill to 19 or a breakout back to 24? Drop your thoughts in the comments. I love to hear from you guys.